if we had a good Fed chairman, you would lower rates. And you know what? If inflation happened in a year from now or 2 years, let them raise rates. But we're going out for long-term debt or short-term debt. We have a lot of debt coming due because Biden had all short-term debt mostly. And we would get a lower rate and a lower interest rate if this guy would lower rates. We get a lower interest rate. It's unbelievable. And he's worried about inflation. If he worries about inflation any longer, all he has to do is get the lower rate, let us go out, borrow at a much lower rate, much lower. You could go down a point or two. We'll go out, borrow them, and if in 2 years inflation comes back, he raises rates. But he keeps them the same. It's insane.
Are you already thinking about who your next Fed chair would be? I know it's 2026 when his term expires, so you're already thinking about it.
It's coming out very soon.
We never really will get to mining the last coin, will we? Not in our lifetime.
Not in our lifetime, but the last 6 months have been tremendous. All of the fundamental planets have aligned. Bitcoin's been acknowledged as the one digital commodity in the world by the administration. The banking regulators have given a green light to bank Bitcoin. The accountants have upgraded the accounting to fair value accounting. There's been a surge of Bitcoin treasury companies. There's like 100 public companies or more that are holding Bitcoin on their balance sheet, and every single week there's another announcement. I think that, it used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of about $45, $50 million a day at this level. That is all being consumed by the Bitcoin treasury companies, and the Bitcoin ETFs are coming on strong. So I'm very bullish. My forecast in July of last year in Nashville was Bitcoin's going to appreciate 29% a year on average for the next 21 years. And that moves it was about mid-60s, 65,000 to 13 million a coin in the year 2045. I'm getting more bullish on that forecast, but I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years. I think Bitcoin's up 57% a year for the past 4.5 years. Again, that's double the Mag 7. That's quadruple the S&P. That's 8 times real estate, and bonds are down 4%. So Bitcoin is smashing everything, Joe. We've done 3 IPOs of preferred stocks in the past 6 months. Strike was our first convertible preferred, and that was up 29%, while all the other preferreds were down 6%. Strife was a fixed preferred, paying 10% fixed yield at par. That's up 22% versus all the other preferreds down 4.5%. So Stride was the third of those preferreds. And what's going on here is we are offering fixed U.S. dollar yield, and we're swapping it into BTC yield, which is what our equity investors want. The big breakthrough is that in the preferred market, the capital never comes due. There's no refinance risk. We're basically offering a perpetual U.S. dollar yield forever. We're getting the capital forever. And so by matching a very long duration instrument on the liability side with a long duration asset, we're creating, in essence, an indestructible balance sheet. And these preferreds are a very scalable, extremely low risk way to generate leverage to drive a very large premium into the MSTR stock. So it's a win for the fixed income investors because they're getting a yield 400 basis points more than typical preferred stocks or junk bonds would yield. And it's a big win for our equity investors because they want more Bitcoin, and this is a way to get leverage without worrying about any kind of bond coming due.
Wow. You obviously are the ultimate hodler. You would buy, if you have money, you buy Bitcoin, I think, don't you? It doesn't matter whether it's up, down, or flat.
150% Bitcoin, Joe.
Do you think at this point that there's, let me just say, what are you waiting for at this point in terms of good news? I think the regulatory environment since the election is definitely improved. We've talked about how much harder it gets to mine, and there's halving. When is the next halving, and what are the next moves that it would cause the asset Bitcoin to get to some of these? I don't know whether you have Tom Lee type projections. I think Tom the other day said eventually it could get to 2.5 million per coin or higher.
Asking you about proof of reserves for strategies, 567,000 Bitcoin. You said that was not a good idea. You don't agree with it because you think it's a security risk to actually do the proof of reserves that way. But there have been a lot of critics in the Bitcoin world about that. They say that snubbing audits like that flies in the face of Bitcoin's founding principles, which are verifiable, transparent ownership. And they say for a company that has its entire business model around Bitcoin, that stance raises some eyebrows. What do you say to that?
Crypto Twitter is very colorful, and we have these fun back and forths. The highest standard of in this case transparency would be a public company audit from a company like KPMG, where they're auditing both your assets and your liabilities, combined with officer representations pursuant to Sarbanes-Oxley about related parties and the like. And so we are a publicly traded company. Our assets are audited. Our Bitcoin reserves are audited by KPMG, as are our liabilities. I think that, we're always thinking and considering, is there a way to do proof of reserves in a secure way? We're not enthusiastic about publishing all of our wallet addresses and having people track them every minute by minute, because it exposes our custodians, our counterparties, and our employees to more IT risk. But we're considering it. We're thinking about, is there a way to do it with a zero knowledge proof? And we're also always thinking about self-custody and what is the right way to manage custodian risk. And I think what you see is there's the OG crypto advocates who developed a bunch of very strong ideas over the past decade, and there's an emerging class of institutional Bitcoin holders like BlackRock, like the ETFs, and like the Bitcoin treasury companies, and they're focused not just on the assets but also on the liabilities. We have to audit and publish those audits with 10Qs and 10Ks.
Now, Ford is getting into robotics. The company is now testing this walking robot designed to deliver packages to your door. The robots would be transported to delivery locations in one of Ford's self-driving vehicles. A delivery robot will then exit the vehicle and drop the package at your doorstep. Ford is teaming up with an Oregon-based company called Agility Robotics on this project.
Wait, Kate, are these robot factory workers? I thought they were going to be, like the ones that Tesla's working on that are going to do my dishes or whatever.
Oh, the humanoids. And we'll talk about that, Kelly. I think that's what we're all focused on. But these were more of software updates this week. But if you think about sort of the start of this big tech AI race, it's only been a couple of years, but Amazon CEO Andy Jassy has made the case repeatedly that this technology is going to help the business internally. He's said at certain points, they're not just competing because it's the newest buzzword and that it's cool, as he's described it. We are seeing more proof of that. At this point, AI is emerging as a way for Amazon to keep costs down within the e-commerce business, in part by using robots. Some folks call this physical AI, especially in Silicon Valley. They're really trying to streamline the supply chain as well. Amazon right now needs this more than ever with the threat of tariffs. Shares negative on the year and really have been kind of in the middle of the Mag 7 pack. This week, Amazon did roll out some incremental AI updates. One model is meant to speed up delivery. Another is to upgrade its fleet of robots on the software side, which in turn would help automate warehouses and keep costs down. The key for investors here is margins. So right now, Amazon's business, it's roughly 11% operating margins. Gene Munster over at Deepwater thinks that could go to 15% if all of these AI efforts pay off. He compared it to Tesla's strategy and thinks the bulk of the value right now for Amazon and AI, it's in fulfillment center robots. Morgan Stanley also weighing in today, calling Amazon an underappreciated Gen AI winner, citing recent investments in automating $200 billion in logistics costs.
Yeah, and I don't mean to be glib, because if they can use robotics or AI to actually speed up the delivery process, that is a huge deal for the company.
Definitely. It's so interesting you brought up humanoids, too. I mean, those are kind of the exciting part, but I would say 99% of at this point in terms of robotics are these robotic arms. You got these things that kind of look like these Roombas that go around the factory space. But if they can lower cost overall, and also make delivery faster. There's a flywheel effect with Prime memberships.
Yeah.
People are demanding things at their doorstep much faster. That's going to help them maintain that, speed up delivery, keep Prime members engaged, and it's kind of fits in the big picture.
It reminds me of, both Amazon and Meta are basically using the technology to do what they already do better, as opposed to pivoting into kind of brand new businesses, at least
That's
for now.
a great point. And Google, yeah.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Michael Saylor says banks and regulators changing the tune on crypto. And we know why. The politicians' agenda is to move this digital economy forward, and we know these big banks and big corporations have been funding crypto from the beginning. And everyone is following Michael Saylor's strategy's blueprint. And he's going to keep buying along with the rest of these corporations. But Saylor is asked about proof of reserves. And we know this Michael Saylor strategy is eventually not going to end well. All these Bitcoins are going to eventually end up in the hands of the banks. And remember, the Crypto Teacher told you. But for right now, you have to ride it. And we heard from Kevin O'Leary telling us it's not going to end well. And we've heard from Kevin O'Leary plenty of times during the FTX and Binance fall. And that's because he knows the plan. Remember, this is a plan. It moves in phases. And you know I've done plenty of videos on robots. And when I first started, this is one of them. This video is over 6 years old. That means they've been working on these robots and testing them for over 10 years. And when you add in driverless cars, drones, blockchain, and these digital assets, these machines can take over the economy without a human involved. And remember, the Crypto Teacher told you. And in June, we're going to be pumping and dumping all month. And going towards the end of this year, we're going to see the labor market crack. But for right now, the Fed is not going to cut. So we know these bond yields are going to continue to move up. And we have a lot of countries like the EU, they can no longer move anymore. They have to pause. And we're definitely not going back to zero. And remember, the Crypto Teacher told you. And these high rates are going to be squeezing these small and medium-sized businesses. And you're going to see a lot of consolidation because these big corporations have a lot of cash sitting on the sidelines. And they'll be able to buy everything pennies on the dollar. And remember, the Crypto Teacher told you. Now, don't forget, we have to finance close to $10 trillion at the end of this year. And jobs numbers are never correct. We know the people out here are hurting. And we have delinquencies worse than 2008. But this is a part of the plan. They're going to squeeze the consumer to their knees. And then, of course, bring in this stablecoin regulation, get it approved. And then we get that universal basic income. Well, that free money is airdropped to the people. But little do they know, with a smart contract, the money is going to be programmable. Being able to tell you what, when, and how to buy, and you have 3 to 6 months to spend it or poof, it's gone. And remember, the Crypto Teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
I think we could get to new all-time record highs. But remember, the reason I believe that is I believe demand is being pulled forward. If you're a rational consumer, you're buying things like smartphones, autos, PCs, because you know prices are going up. You've been told that as you get towards the holiday season. And if you're a corporation, just like Apple airlifted 600 tons of iPhones before the tariffs kicked in, you're doing that as well. And you saw that in the 41% growth in imports in Q1. And remember, the US is 25% of global GDP. So that distorts numbers all around the globe. But if you're buying a car, smartphone, PC in advance, you're not going to be buying it during the holidays. So as we approach Thanksgiving, that's when I think you have to get very worried that, much like you saw earnings come in better than most expected in Q1, I think you're going to see earnings come in worse than expected in Q4 because of that pull forward.
I still think that it probably will take quite a while, at least in my baseline, before they bring down rates. The next move, I think, very high probability is down. But I think for now, wait and see is probably the right expectation. In our baseline, we don't have cuts until the end of the year, until the December meeting. All the risks are to the lower side. So I think the market pricing in more than one cut certainly makes sense from a probability.
All the risks except for inflation, which seems to be the big question mark about whether we'll get a real meaningful boost of inflation in the second part of the year because of tariffs, and whether it's a one-time thing.
That's right. And I think we will get a significant increase in inflation. We have about 100 basis points of acceleration. But at the same time, I expect this to be a price level effect. And once we've gotten through the tariff-related price increases, I would expect sequential inflation to come back down pretty quickly.
Well, one top investor is questioning the street's enthusiastic response to the jobs report. CNBC contributor Peter Bookvar is Chief Investment Officer at Bleakley Financial Group. Peter, good to have you with us. Were you surprised at the market reaction? I mean, the market seems to want to believe the best case scenario here.
Well, it was interesting. Once that data hit, the S&P futures went up like 50 points. And I'm going through the numbers, and bonds sold off too. So I'm trying to square our stocks celebrating maybe weakness, because when you include the revisions, but then what's the bond market looking at? So there wasn't really a clear message with the 10-year closing at 4.5%. So I was somewhat confused. I'm a little more clear on the actual number. If you take the downward revisions of 95,000, compared to what the market saw at 829, we really only added 44,000 fresh jobs because of the number itself minus the revision. Then you had the household survey that fell almost 700,000. You had the highest number of people working part-time that want full-time work since April 2019. But then you had wage growth that was good. So there were a lot of cross currents. But I think overall, the pace of job hiring is slowing. I would not ignore what ADP also said on Wednesday. But the bond market is resiliently higher in terms of yields because they don't believe that the Fed is going to really cut. And even if the Fed cuts, it doesn't mean long rates fall in conjunction with that.
Going to a different economy. And we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important.
Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. From COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.